Welcome to Ben Talks Money. Here we discuss stocks, investments, ETFs, and personal finance.
The Federal Reserve last week signaled that they are ready to cut interest rate, and there are some companies who are well positioned to benefit from this interest rate cut, which is expected to come in September. So in this video, I'll discuss one of these companies. We'll talk about what the company is, what they do, how they stand to benefit from the interest rate cut, their competition and their competitive edge, and then we take a look at their fundamentals and we analyze the chart to see where we can get in to maximize our investment. So let's get started. The company that we are talking about today is Open Door Technologies. It's a real estate company, a digital real estate company. They are the pioneer for the iBuy. And what iBuy is that they buy the homes, the real estate from the buyers directly. So if you want to sell your house, instead of you going through the hassle to try and find a buyer, Open Door will buy the house cash from you. And then they will renovate it if they have to, make all the fixes that they have to do, and then resell the house. So that's the basics of what Open Door do. So Zillow is one of their competitors. OfferPad, Redfin, Orchard, HomeLight, among others. But the competitive edge that they have over their competition is that they are, again, the pioneer and they manage the iBuy real estate model, right? They also use AI and data analytics to be able to price the properties in such a way that, there will be no bias, unlike somebody coming to your home and looking at what you do in your home, how the place smell and all those kind of stuff. They use AI and machine learning to determine the price of the home without any bias. And they also offer lower fees. So the fees are lower to the seller, which gives them more customers. They focus on low average services. So they provide low average services, which helps them maximize their revenue and their profit. They offer high insight to the sellers and buyers. You get to know everything, what you are, going in for, which is huge for somebody if you are buying a new property. So that's the competitive edge that they have over competitors. If you look at the fundamentals for Open Door, this company went public back in 2021. And unfortunately, that coincided with the time that the Federal Reserve, they were hiking interest rate. So the stock at that time was trading around $38. And because of high borrowing costs, which prevented them from expanding the business, so the stock dropped all the way from $38 down to around $1.20. And now that the Fed signaled that, started cutting interest rate and stuff like that, the stock is picking back up. The company recorded their first ever positive cash flow in the second quarter of this year, which is a huge signal for investors. And their revenue for the second quarter of 2025 was about 1.6 billion, which exceeded expectations on Wall Street. Their revenue guidance, they guided higher than Wall Street expectation. Wall Street was expecting about 800 million for next quarter. They guided 875 million, which are things that, the street always look for. The company is turning around. The market cap is about 3.1 billion. They have about $800 million dollars of cash on hand. With the lower interest rate, they will have new generation of customers. And now the younger generation, they don't want to be going around looking for houses and hunting houses for weeks and months and all those kind of stuff. They can just go to Open Door, make a search, look at it, take a virtual tour, and, limit their search to a few houses. Go and take a look at it, and buy it straight ahead. If you want to sell your house, you can just put it on Open Door. They will evaluate the house, inspect it, and you get cash right away. So it will bring new generation of customers to them. They will have high capital at a lower interest rate. They can borrow more capital at a lower interest rate. The AI tools will help them analyze the entire market. They have a huge market share compared to their competitors. Again, they are the pioneers of this real estate model. So most often, pioneers are the one who take the bulk of the meal. And the most important thing about this is that the sentiment on Wall Street about this stock right now has changed. The stock has moved drastically. On the day that J. Powell signaled the interest rate was coming, this stock went up 36%. So it tells you that this is what most investors has been waiting for. One thing that you have to know that even though this stock is trading below $5 right now, it is not held mostly by retail traders like you and I or retail investors. More, this stock is highly held by institutions. 62% of the shareholders are institutional investors. What it means is that these people are in for the long term. They are not buying the stock and selling it tomorrow. Usually, has to be, they are in ETFs, pension funds, and all those kind of stuff. Your 401ks. And so these kind of investors, they hold stocks for a longer, much, much longer period of time. Right. So that's the case for Open Door. Now let's take a look at the chart to see where we can possibly get in to start a position. So if you look at the chart here, this is the daily chart. You can see that this stock, from their IPO, it went all the way to $38. And from 2021, that was when the entire stock market was coming down, mostly because of the hike in interest rate. A lot of the growth stocks went down drastically. And this is a growth stock. So, but if the company cannot grow, then there is no point. That's why the stock came down. Currently trading around $4.50. But if you look at it, it's been making a move. It moved from the lows of 50 cents all the way to the highs. I think the highs was about $5.30. And now it's pulling back a little bit. It's pulling back a little bit. And if you take a closer look at the daily chart, you can see that is a huge level. The $5 zone is a huge resistance level in the stock. You can see it from right up here. You can see it from here. That level. You can also see it again from here, from this zone. So that's a huge level for the stock. And once it hit there, it's pulling back a little bit, right? So the best way to play this, let's look at the 50-day moving average and see where that lies right now. The 50-day case. Let's look at also let's look at the 200 and see. So it's trading well above the 50 and the 200 SMA. And it's currently, the stock is currently pulling back. It pulled back on Friday. No, it went up 36% on Friday, and it pulled back yesterday, which was on Monday. It pulled back on Monday, and today is pulling back again. And let's look at the volume, because the volume sometimes also tells you. If you look at the price volume trend, you can see that it's trending up. But okay, and let's look at the RSI. So you see the RSI went all the way to 80, over 80, and which was an overbought zone. So if you look at it historically, every time it touches, the RSI touches over 70, 75, it pulls back a little bit. So right now, the best option is to wait for this stock to pull back a little bit, let it pull down. Ideally, let it get to $4 and see if we can hold the $4 zone. If we can hold that $4 zone and consolidate for a little bit. So the thing is that it has a really low float. So when it begins to move, it moves violently. This stock can move 30% a day. It did that on Friday, as you can see here from the daily chart. It moved 36% on Friday on huge volume. So it can move, but if we get a red candle close on Tuesday, it will be really nice. And then we can see on Wednesday or Wednesday, Thursday, where the stock start trading. And then, the best way is to let it pull back, maybe hold the 450 zone or $4. If it breaks below 450, can we get it down to 4? If you can hold 4, then I think it will be a good entry point, right? But to me, if you are buying for a longer term, it doesn't matter. Or you can do dollar cost averaging. You can buy it weekly, put a few dollars in every week, to average it over. And because it's really hard to time the market, right? It's hard to time the market. So the best way if you are investing is to do dollar cost averaging, right? So the play for open is to give it time to hold the 450. If you can hold 450, if it breaks below 450, we can catch it at 4. If you can hold a 4, is good. If you are looking for a long-term investment, it's already pulled down 2 red day candles. You can start with a startup position and watch the stock, watch the news around it, and do a dollar cost averaging, right? But this has a huge potential. This stock has a huge potential. You might not want to miss it. The upside is huge. So that's my thought on it. You also have to do your own research, do your own analysis about it. Make sure it fits your risk profile before you put any money on it. This is not a financial advice. Okay, so that's it for today. Thank you for sticking around. If you've come this far, it means you like the video. And if you like the video, then please hit the subscribe button, turn on the notification, and share, like. And until next time, let's keep talking money.